Good morning, everyone. We got about 10 people in, so traditional Tuesday today, so it's going to be just traditional markets, but good morning.
Let me get back over to the list here. Okay, Mr. Jack. All right. Well, we'll give it another minute or two and we'll get rolling. All right, there's 14. One more. One more. Come on. Who's going to be? Let me get start here. Oh man, we're retracing.
14 to 13. Someone's
Yeah.
like, nope, I'm out of here. No crypto, I'm gone.
Yeah. We got Lord Khan, Mike Snell. All right, we're back up. All right, looks like we're coming out of this measured move. Oh, we're retracing again. We're in an algo box.
There's 15. Got it.
All right, 15 it is. All right, let's get started here. All right, guys, good morning. We're about 6 minutes in. Nothing but traditional assets today. That's how we rotate crypto. We do, of course, we do Bitcoin on Friday, then also on Monday, and this is the same routine we do with members. Traditionals on Tuesday. Then my partner Monty Crypto. Are you doing only crypto?
I'll do whatever they give me.
Whatever they give you, right? So that's kind of an open posting that he reacts to. And of course, he has a very different approach than I do, which allows for a lot of variety within the membership here in terms of where people are drawn. Elliott Wave Mastery is not a requirement, as my partner demonstrates on a regular basis. But with this routine here, and just for those of you that know, we always have some new people coming in. What we do here is we ask the members to post up the assets that they are interested in, or that they're tracking or trading or looking for setups, and then they submit their charts and gives us a chance to review how they're progressing as technicians with regard to our methodology. And then as I will say every time, it's a great place to look for setups, as it's 100+ people, scanning for similar kinds of setups. Now, not all of our members post. We have a consistent group of people that are very active traders, and that's typically what you'll see here. Many of these are people that have been with us for some time, so you're going to see quality work. And then we have new members as well that are just learning and getting their kind of cutting their teeth on our methodology here. And a lot of times they're posting. We can give them some feedback on perhaps areas that they can work on, or maybe something to review as would relate, or if nothing else, just give them another way to look at it. It's not about critiquing so much their analysis as just making sure that all the scenarios here are accounted for and they're prepared for that. So with all that said, let me start here. So first up, Mr. Jack 245. This is Ark Innovations ETF. Now he's posting here. We got a 4-hour with a Fibonacci, which I like a Fibonacci. Whenever I see it, I always think of frosting. It always looks to me like it's frosting on the top, but it's a nice way to trade, as it's a trend influence candle. I use it a lot in day trading because it'll keep you into a trade, as opposed to the little up down candles often will scare you out early. So I like that. It's something I will look at. It depends on the time frame that I'm trading. Now here on a 4-hour, right, there's some value in it here. Pretty nice count here. Now I'm starting out in log scale with Mr. Jack here. So we're going all the way back to inception here. It looks like it's started 2015 to get the, this is an unusual pull, but it's 1A. We expand the B into the 2. So it's a very legit pull. And look at how technically the market's reacting here. Now that is in log scale. When we look over here, I think we'll go out of log, but note here and this is very common. So right, I think I've said this enough, right? So people understand, right? So there's your 80%. Now, once that's realized, then note here, and that's trading principle number 4. If we're not going to pivot right on the median line, the market will often hover back and forth, and then buyers and sellers sort it out, and whoever's going to take the auction process up higher and see if they can establish, right? And ultimately we get to one. It's hard to understand. You look at it and you go, how is it possible that it's that precise, right? And then we're back to the median line. How is that possible? How can it be that consistent? Software, right? We human beings are not that precise. We're just not, because emotion drives most of the trading decisions in here, right? So computer software, It eliminates the emotion. That's why they do it. We as human beings, right? Fear and greed, right? That's what causes, that's all it is, fear and greed, moving the markets and crowd dynamics. So with a 1, 2, nice 3 here, clean impulse inside of it, and then the geometry, right? So there's the core of our methodology here. We've got fib swings over here, fib relationships. We've got geometry, and then I always do it in that order. Third in degrees of importance is the Elliott count, and it's there only if it's helpful. Now here it certainly does look like it with a 1, 2, good looking 3, got an impulse to confirm that this is a good 3, and now we're working through the complexity of a correction. Excuse me. So is it done here? Well, this looks like a pretty tricky one. Now I'm going to come out of log scale. See, it radically changes the geometry. So, but given the range that we have here, right, it's typically 3 plus 4 to 1 for sure. When you get beyond, 3x the range, you certainly want to look at it in log. Now, and TradingView has finally done a nice job here, but a lot of people will ask about this. They'll say, why is it when I pull, I don't get the same, oh, hang on a second. Let me get these on here. I don't get the same levels. And that's because you have to be sure that this is clicked on. So fib levels based on log scale, that little check mark, a lot of people don't catch it because this was something they added, maybe a year ago, so that it would relate in log scale. And if that's not checked, I get not a week goes by if I'm not looking at something in log where someone says, I can't get my levels don't match yours. What's going on? And that's usually why. So here, now I'm going to come out of log scale here as we look at this section here, and let's just zoom in there so we can see now the range we're looking at here is much smaller. So it makes sense. We're not looking at 4x the range. So this is nice work here, right? Triangles are probably the last thing that people get a handle on. And an Elliott Wave, when you're confused, you're like, what the heck? Often, right, as soon as that pops into my head, I think, oh, triangle. And often that's what it'll be. Hang on. Now we can see, here, it's just right in your face. Okay, so 1, 2, 3, 4, 5, right? So coming off of the pivot. Okay, just process of elimination. Okay, well, we don't really get a 3 here. Now you might have been thinking, oh, the B was in here. Okay, A, B, C. Oh, we're going to have a flat, we're going to truncate on the C. We're not going to get a new high. And you'd be anticipating that to head down. Well, when you get that, right now it becomes all the easier. I got it. Oh, triangle. Right. The anticipation is that we would push out of that in context of the direction of this correction. What do we do? Right to the 50. Right. So, and this is nice again, right? So one of the ways that I can always tell whether people are really internalizing what we're teaching is how well they're using geometry. Now that could be median lines, channels, speed fans, somehow, some way you got to get geometry in this because the geometry is very important to the market, right? And it respects it on a regular basis because computers can work with it, i.e. algorithm software can work with it. So as we look here, okay, 1, 2, well, looks like that would be 3, 4, 1, 2, 3, 4, 5. Okay, so we've got a 1 here off of the low, right? Again, it's context. I get 3 down, corrects me here. So good looking 4, and I'm right. While this is deep for a 4, remember we're in log scale, so I put it back in log. Now we're between the 23 and the 38, right? That's the high probability zone for a 4. Out of log, it's going to change it, of course, but it's a little front run on the 50 would appear. So we've got a good, again, now how do you know it's a 1? Well, you don't know yet. Like until we're complete here, you're making a logical deduction here. Okay, so I have a completed impulse here. I'm anticipating the correction. Now, is the correction done? Well, you would pull back and look at that in the context of length of time. And you might say to yourself, well, that 2 sure did take a lot more time than the 4 if it's in. Well, we'll put it back in log, kind of look at it. You still make that same conclusion. So it's certainly possible that, we might do something like this and there'd be another leg down. It's certainly possible. So while you say, how do you know it's a 1? Well, you don't know it's a 1. It could be a 1. right? So how do you go through that process? Well, the geometry confluence here. So we've got the combination of hitting the center line of the channel as well as the larger median line. So you could make an assumption here, but so you do it one of two ways, right? And Mr. Jack, who's now become a very skilled technician, would probably do this. So I'd have one count on the left side and an alternate on the right side. So I'm not surprised by anything. So if you're forecasting this out, in your alternate, you might say, okay, well, it might be a 1, might be an A. Now let's get these down here. Might be something like this is still coming, right? Because until we break that pivot, and even then, right, depending on the shape that it takes, you could have an expanded B wave here. You don't know. You're making a deduction here based on what's come before it. Now, could it be the 1? Absolutely, could be the 1. But my hesitation, the reason that I would maintain an alternate is because of the length of time of the two. And this is the same. It's funny. It's the same thing that's happening in crypto, right? Much like Bitcoin, even though the pattern is slightly different here. We don't have an expanded B wave with Bitcoin and some of them in the alts, the major alts. But it looks like, it needs more time. So that's why I would keep an alternate close by just in case, because there's lots of ways this could resolve here. So that's my thinking here is same thing going on in Bitcoin, right? My count in Bitcoin is, as I said this to another member who has the same count, it's the most hated count in crypto. Nobody thinks we're going down to put in a lower 4 or at least retest 30. I've got mixed feelings on that amongst my staff, right? And it's not that. Right. Nobody knows what's going to happen. We're just making logical deductions based on what's come before it. So it is interesting to see how committed most of crypto is to the low being in. As soon as I see that huge sway of sentiment, it always causes me to pause just a bit and say, what do I know from experience? Well, the herd mentality is almost always wrong. So that remains my primary, right? And here I would be curious to see if this might have this. In other words, the correction's not over. Now, of course, it could be, right? It certainly lines up here with the geometry. So with all that said, here I am doing it again, taking too long on each individual one. Okay, so we've got 3 into the B. So this, you could probably get 5 into that. It looks like you could. 1, 2, 3, 4, 5. Okay, good candidate. Clearly, that's 3. Are we coming down for the C? Well, if it is, what I'm not saying is not to be a buyer here. I would be a buyer there, but I sure as hell would have a stop on it. 707 is a good number here, right? So if you're going to enter off of a golden zone, well, we note here, I would do it a little bit. I would pull this down a little bit, right? So if I get into that box here, I'm interested. Right? If we come down here and we start to stall, well, now we'd have, I might even do this, right? So I might get this running parallel in there, right? Off of this pivot here, if I get that right there. All right, so I might look at it that way and say, okay, if I've got a sliding parallel off the median line here, if I come into this zone, so you can look at it and say, well, why would you not be a buyer there? Of course, the first thing I would do is you'd have a candidate for a golden corner, right? So now I got 80% odds, all right? And if I get a pivot here, I know I got an algo working with me. So I like this trade. It's a good setup, Mr. Jack. So, and still, what's interesting here is that this could go up. Now, do we get a full 3 and we're ripping to a 1618? Well, hard to say, but we could go, we could go to a 1618 and this still could be a B wave. It could be an expanded B wave. Now you'd be leaning more heavily into the idea that 1, 2, and we're into the 3, but we can't eliminate that process, or pardon me, that potential scenario until we get the 4, 5. Right, it remains a possibility until we get that, right? Then we know we had an impulse. Until then, it's probable, right? But certainly not impossible that we roll over again and ultimately come back down here into some of these lower levels here that we looked at with regards to length of time. But would I be a buyer here? Yeah, but I wouldn't be shooting for the moon here. I mean, that's a big one, right? So if I take that out of log scale, we'd be coming up here to 190 and we'd be entering here at 109. I mean, that's a fantastic trade. So how would I trade it? I would just I'd give it room to breathe, but I'd trail maybe 2 pivots back or use a moving average or something that you're comfortable with on the anticipation that if I get a 3 there, if we start to roll over again, so look here, that could be A, B, C into a B, expand the B, and we're down for the C. So I would be trailing with a stop along the way, and maybe not the closest pivot. I might be back 2 pivots to give that room to move if it's going to get that 3. And then if you get stopped out on the anticipation that you're going to come into a little 4, then there's a reload there, right? If you still have that same conviction into the trade and this breaks down as a pretty impulse, well, it's again, hard not to be interested there. And if you get stopped out, okay, well, let's say you got stopped out right there. Well, you certainly made money net, right? Even though you took a loser here on the assumption you were disciplined with your stop, that you're not going to give that room to go all the way back. If you get that, home run ball. Great looking setup. Thanks for sharing that one, Mr. Jack. I hadn't looked at this ETF in a long time, right? So that's one. So here's how I would leave it. Watch list. All right. So this, I'd put an alert a little bit lower, maybe a little bit lower. I might even do it this way. Say, all right, if it's going to come down to that pivot, I want to know, right? If it gets that low, I want a heads up. So I'd be looking for that same reaction that I always suggest, right? Do I get a little pop and then a little retrace? Now I'm in.
Someone in the comments said fundamentally no way for Ark to move up so much, but if you've looked at markets, they don't go by fundamentals really. I mean, GameStop and things like that. Like
here, it's like never say never. Words to never use in the market. No way, impossible, can't happen.
0%, 100%
probability. It will never happen. As soon as you say that, it almost guarantees that it'll happen. And probably the most poignant example of that, and I've referenced this before, when I drew up an algo pull with a fib targeting crude that had it below 0. And I remember saying, well, it's, certainly we're not going to go below 0. I'll be damned. Right. So anything is possible in the markets within some degree of reason. Right. So saying those kind of things, that's not a good habit to get in. Right. It's unlikely, but never say never. All right. So with that said, let me keep moving. That's one for people that are ETF traders. That certainly is a valid setup. Right. Is it a winner? Well, right? Doesn't really matter, right? I mean, if it's a winner, great. If it's a loser, as long as you're disciplined with your money management, okay, loser, part of trading, next setup. But this is certainly valid. If you don't like it, don't take it. Right? There's got no shortage of opportunities, no shortage of assets, no shortage of opinions. We just trade the technicals, right? If that comes down in 3, that's a buy. Okay, let me go to No Fear New York. Good handle. What we got here, No Fear New York. All right. New Fortress Energy. I think we did look at this not too long ago. All right. So this is interesting combo down here. Like a lot of times I'll see some interesting things members are doing with indicators. Now, so we have, what's he doing here? He's got the RSI stacked on top of the, Oh, I see. Okay. So he's got the Elliott oscillator. He's got the RSI stacked on the Elliott oscillator. Oh, that's kind of an interesting use of it. All right, there's the weekly, clear 5 up. That looks like, well, so you can look here and say, well, that's 3 down right to the 50, right? You thought that might have gone with the rollover here. Now, where are we, right to golden zone. Now this is, let's see, what did he do here? I'm gonna pull that up a little bit. All right, so the break of the golden zone would be a negative, certainly out here on the weekly, and that's enough of a break. So it looks like what he's trying to do is enter here off of the corner. Now we don't get a golden with that break. Let me zoom in there a little bit. So with that break, well, so here now you'd want to see these being weekly bars. I'd want to let a week go by and see an up close here. You can give that time, and that's what you'd try to get into if you're working off of that corner. Now, this is a big loss. To lose the algo there is not insignificant, right? Because that's off of the dominant low. So what you can deduce from that with absolute certainty is that they're going to be sell side algos on the way back up. So you'd have to use both of these pivots because an algo will use both of them, right? So this is going to be, so now that doesn't mean you can't make money here. This is going to be important. And if we go back 1, right, we're going to get so you're going to have 2 little pockets here that would be the resistance. So that's a long way to go. right? There's room to trade that, but I don't like it as much because I don't want to lose that algo. So this is a judgment call. So you'd really have to like there would have to be a reason beyond just the pure technicals to take that trade. Now, nothing says that with the break here, we can't go higher. Of course, don't mean to suggest that. It's just, you don't have the additional advantage of that algo behind your back. So the other thought is you might, because you want an algo, you might let this thing get a little bit higher and then take the first 50 golden zone-ish area. Now you got one behind your back, right? So you missed one here. So maybe it doesn't make that target, but you certainly got some resistance up here where there's plenty of money to be made. But it was me. I would wait. Give me that and give me that. Now go, because I know I can catch an algo here, right? Maybe off of that structure. Then I can get into a 3, 4, 5. Get me right there. Okay, so maybe that's 1, 2, right? And it will go. Because the Elliott count, or the break of the golden zone, excuse me, doesn't invalidate the Elliott count. It's just we know an algorithm won't be behind us there. Okay, so that's an interesting post, no fear, right? So you must like this, right? Let's check in on this 2-3 weeks from now. Let's see how the progression is going here. Are you starting to get weekly closing candles that are in the green? All right, let's keep moving here. So next I got Volcker. Volcker always puts up interesting work. So let's keep moving here. And let's get what Volcker's got. Volcker is an FX trader. Let's see. So how do can I get that link? Can I do that? I think he sent me the image. Yeah, I think I just got the image. Okay, all right, I can work with that. So, oh shit. Okay, so we've got, this is a 60-minute on the pound yen. Okay, so coming down here, he's going after a B. So seeking the C up here, we got A, B, C. Looks like median line's been tapped. Now the anticipation is he's looking for this to come down to the golden zone. So he's going 1 via 5. 1, 2, 3. Let's see how we get in there. Oh, it looks like he's doing an expanded. So we get an expanded B wave here into a flat. So we get a running flat with the expansion here. So it's 1, 2, 3, A, B, C into the 4, up for the 5, A, B, C. Gives us the base of the median line. So again, note the geometry, right? So he's got it running on the larger degree as well as this retracement here, right to the median line. So as we sit there at the median line, it would appear that he's anticipating a breakdown to the golden zone here. Now, if I love this trade here, I might take a nibble there, but I'd want to see, we're running into this pivot here that's potentially, right? It's not as strong as resistance becoming support. It's just, it used to be support, right? It got blown through here. Now, would it hold again? That wouldn't be enough for me to make the trade here. Now, at the median line attracts my interest here. If we come down a little bit, it looks, I can't blow it up in there, but it looks like we're just past the median line. He's looking for one entry here. First stop, 786. Looks like if it starts to go, he's going to add, or he's giving you 3 different ranges to do it. So if we come up here and it's going to be if this is the 1 or the A, and this is the corrective action off of it, we're looking to finish in 5. So one more leg down would put us right at the golden zone, but then you would draw another set of median lines projecting up. If you could get in the corner here, then you get a golden corner, let the thing get a little, so I see what he's doing. Pardon me, I'm not paying attention here. So he's looking for that pivot, and then you see the little, oh shit, I can't draw on it, but there's a little 5 wave here. So he's looking to take the retrace off of the reaction down here. Give me the 1 of whatever this next pivot is. And it would be 1, 2. Enter here 3 levels of stop placement. So here, maybe you take your smallest level of size with the largest stop, and then these would be alternates in terms of potentially laddering into the trade. So waiting for the reaction, right? You don't want to try and catch the falling knife. Let it react. First retrace, you're in. Nice. It's good. Good looking work, Volcker. I'm sorry I didn't see that. It was kind of grayed out there. All right, good work, right? And all the ingredients there: fib relationships, geometry, the Elliott count when it's helpful, right? Very well done. All right, so I got Grant F up next with AMC. All right, so this should be of interest. So many people trading this. Grant F usually gives us a harmonic. Let's see what we get here. Okay, so that's view only. So let me copy that. All right. So Grant has developed a real skill of incorporating harmonics into an Elliott count, right? It's all fib relationships, so it would make sense. All right. So ABC, I gotta zoom in there a little bit. So what do we get here? Oh, what do we got there? Grant, that looks like butterfly. Okay, so it's always about swing relationships. We'll note where we are, right at the golden zone. So we don't get a great look. Well, so right there at that moment in time, you can't tell, right? Is this corrective, right? It's got to get higher, right? We got to get that to know. So the place to be a buyer was down here, right, on the retrace. Now it's going up. Right, so we're retracement traders. So at this point, you're a bit late to the party here. Now, I'm hoping that he got in here. Note the Vegas wave. It's a little bit grayed out, but we're right to the 233. Right, it's very easy to go eye blind to that. So I would darken those a little bit just to avoid that. I almost didn't spot it, right, because it's kind of grayed out. But you see how we get the A, B, and then we get the C. But within that C, you've got this harmonic. I think that's a butterfly. So we get right to the golden zone. So right, so we get a golden corner. Right. We know we got 80% odds working in our favor. So we have the combination of the reversal zone from this smaller harmonic that we've got the ABC that gives us pattern. We've got price, i.e. the fib level from which it's responding. And then we got geometry to give us a target. Right. That's the epitome of what we do at Trade Devils with the addition of the harmonic, which is just a bunch of fib relationships, right, that give us that. It's always that. The emphasis is potential reversal zone, not a guaranteed reversal zone. Potential, just like a golden zone, it's just a potential reversal zone. We just see it with high degree of regularity because we know software responds there. All right, so ABC, pattern, price, time, geometry, 80% odds. Why would you not take that trade? I mean, you can trade this with options, right? So that's, the volatility. I mean, the calls are probably not crazy here. I haven't looked at the vol on AMC after this sell-off here, but you could get in that right now. I'd buy slightly in the money, and you got to give that, options. You don't want to do less than 60 days. If you're trying to make that run, because the time decay, you could be right about direction and you still lose money if you don't get the timing right. So you're safer to always go out 60 plus days with an option, but you got to pay for that, right? So people don't like to do that. So what they do is they buy the near-term options because they're inexpensive. And that's why the only trade with higher probability, I've been correcting myself, in the marketplace of all the tools that are available is buying options, right? 90% expire worthless, right? It's the only odds better than a golden corner, which has 80% probability. 90% are expiring worthless. Why? Because the novice trader or the impatient, right? I want to be rich now. They buy the weeklies, right? And they only get a few days, and the time decay just crushes it. So this thing could get here. The options expire worthless because the time decay just took all the value out. Now, unless you bought in the money, you get some intrinsic value there, less the cost of the option. So you want to buy at the money, and you want to give it 60 days, but you're going to pay for that, right? Otherwise, just buy the underlying, but you get much better leverage with an option, right? Which is why so many people are trading the meme stocks with options. Been great for the brokers. They're making billions. Nice looking setup, Grant, right? But I would take it, right? The little harmonic is just a bonus. I'd take it right off of the golden corner, right? Look at right? We talked about this yesterday. What was the key to trading, right? Small loser, small winner, small winner, small loser, big winner, right? That's the name of the game, right? See, he could be wrong 7-8 times in a row, right? It just takes one of these where you're getting 12-1. As long as your money management is disciplined, the one thing you cannot allow, and this is the hardest lesson for people to learn, you cannot allow for big losers. It's so easy to say, and people go, "Oh, I get you, man. I totally got that, right? No big losers. I got it. Yeah, okay. I'm not going to let that happen." I mean, very few, many people come to us and they say, "Oh man, I blew up my account. I'm trying to start over. So I'm trying to learn a few things this time." Really? Well, what happened in your account? Well, I fell in love with this whatever X asset, and I didn't want to put a stop on it, and eventually cratered, and I got liquidated. You can't put yourself in a position where they can knock you out. Many have heard me use the boxing analogy, right? You can take a lot of jabs, but that uppercut to the jaw just takes one time, one little mistake, one time. Your ego gets involved. I know that thing's going up. I saw it on Wall Street Bets. They're going to squeeze this guy. I know it's going up, right? That'll be the time it'll do that. Well, maybe not below zero here in an equity. That might be impossible, right? We'll never thought I'd see it in crude, but we did, right? So here, again, why would you not take that trade? You've got geometry, price, pattern, harmonic, an incredibly liquid stock that people love trading, and they love to see it go up. It just takes one or two, right? Just to make your whole year. Good looking work, Grant F. Always solid, and always he includes. In fact, I think he's using that little harmonic. If you look in our link tree, there's a great little, if you're interested in harmonics and you don't want to have to memorize all the patterns, which I don't, I use software to tell me what it is. I think that's a butterfly, but I'm not positive. Grant would know. In our link tree, there's it's very, very, very inexpensive. I think it's $19 a month. It'll give you more harmonics than you can chew, right? It's harmonics all day long, depending on how many asset classes, right? You can check that out in our link tree that's underneath this video. All right, good looking work, Grant.
Hey, Sam.
Moving. Yeah.
So Volker on the FX chart, he had a comment for you in the vote.
Oh, what did he say?
So basically, he's like, could you talk a bit about the use of volume in Forex? Does each broker report only their own volume, or do they have an aggregate? If they only use their own, is it viable to look at it?
No, you don't. There is no. There's only tick volume in futures, right? Because there is multiple exchanges. So volume has value in FX with regards to volume profile, or a tick volume profile, because you don't get true volume. So I would have. Well, you can use. Let's see on TradingView, Oanda has a tick volume. That's one of the few that will give it to you. So, or the proxy is you could look at the FX futures, and you can't get all of them, right? You can't get all the cross spreads there. But if you're trading against the dollar, you could use the proxy there and look for that reaction. But for something like he's doing, which I think was the pound yen spread, all you can use is tick volume, and you can use O&A on. I think the only ones that give you live stream, or pardon me, that give you volume profile with tick volume. So it has its place, but it's not like reading volume on an equity or even crypto. All right. So hopefully that answers that. Okay. So let's go. Here, one of my favorite handles, and he's become quite skilled with his TA, Top Hat Panda Magician. All right. So let me get that link. And let's see what he's thinking. Top Hat Panda, always posting good work. All right, so there it is, right? So we've got price, pattern, geometry. Look at the confluence here. So in white, we have the channel, right? Double top, double bottom. But note the geometry here as we hit the median line, right? So you didn't give me, so all I can see is that we're at a 50. So I don't have a workable chart to work with. So swing high. I've got pattern, right? So I get an A, I get a B, and I get a C. I'm at technical significance here. I'm at the 50 where we know software will start buying, and I'm at the median line. Once again, right? Why would you not take that trade? Oh, it's been going down. All right, I think it's going to go lower. All right, then don't take the trade, right? And I wouldn't necessarily just buy it at the market. I'd want to see a little bit of a reaction there. But look here, off to the left. So we've got nice structure coming in there. So prior resistance, right, potentially becomes the support. Potentially, right? Nothing says that can't fall. Nothing says that we can't break through that and head to the lower parallel. Certainly you can. So you'd want to see some little reaction there that the market is responding. But that, I mean, as it sits right now, I don't know what we're doing now. That's, oh shit, we're doing Zoom as we review Zoom. We're on a Zoom feed. Same kind of thing, right? Give me a little reaction. Give me a little reaction. All right, first little retrace. Maybe I'm doing this is a 240. Maybe you're down to a 30-minute. Just give me a little bit of a pullback, because then I can use the pivot as the low. If I get stopped down, I'll reevaluate. It could go a little further, right? We know the golden zone is going to be down here, right? So maybe it's going to push some of this lower structure here. So it's not. I would try more than once there, but swing, right? Internal retracement, right? We don't get an external. right? Tries, can't get external. And you know, here's the thing. So when you get here, when they can't break that pivot, that is the market screaming at you. Because I guarantee you everybody long is trying to get the stops that are on this other side of that pivot, right? Because that's the fuel that can take it higher. Now here, right, it's the same thing, right? They're going to be stops right there. They got those stops, right? But if it can't fall, if it can't go get legs off of that, then yet again, the market is talking to you. Right now, we got the confluence of that location. They've already tapped the spot. They've tagged and filled all the stops that were just below. Now, there are going to be others that would know better. They'll give it a little more room. But retail, I guarantee retail's all 1 or 2 ticks under that pivot. They already got all that. Right? Market makers will grab that. Now, does it go up? Well, it would be, just thinking about, right? Everybody all of a sudden, right, we were like, oh, Zoom's over, Peloton's over, right? The COVID's behind us. All of a sudden, maybe not. So great work, right? It's always these guys, what you see here, I wish you guys could see the transformation from when they were first posting to what they post now, right? That's the joy of this for me anyway. Great work, Top Hat Panda. All right, I got Mr. Jack coming back with a second look. All right, we got time to do these. All right, what do we got, Mr. Jack, on this one? Can you top that first one? This is Fisker. Oh, I knew you must trade this regularly because I know you post this quite a bit. What does he got here? I've never traded Fisker. I don't really know. I can't remember if they're something in automotive. I can't remember because I think we've looked at this before. So we had the first reaction here out of the golden zone. We're back for a second visit. I'm always a little suspect on the second visit. The best reaction is, that right there. Okay, so here's the first time down. Oh, okay. So it's just, I love this. You got to just love this stuff. Okay. So look what we have here. Trading principle number 4 from Alan Andrews. Let me do it this way. Failure to make the median. So we get a golden corner here. Failure to make the median line. And this is exactly what the rule says. Failure to make the median line sets up a move equal to or greater than the swing that failed to get there. I can't look it up yourself, right? Alan Andrews, trading principle number 4. There it is right in front of your face, right? So, when you say, oh, these trading principles, that's so 1960. When was he doing that, right? That doesn't, it's all algo driven now. None of that shit works anymore. My favorite, of course, is Elliott Wave doesn't work in crypto. That I may frame that. That's the most, I just amazing to me. People could put that comment under one of my videos, right? Apparently they haven't watched many of them. But so looking here, so if this is 1, now back for the 2. Now, does it make sense, right? Does this make sense? Could this, right? From an Elliott perspective, does this make sense? Wow, it's a wacky count, right? To go that long extension in A, just a straight shot, right? But by the way, right, straight shot. Now here, right? So here we miss. Now we reload. Now we're in the golden zone here. So would I go again? Absolutely. But I'd be a little bit more I'd want to see a little more confirm, right? So we could do it here. You don't know when you're going to do it, right? You know that as long as that holds, right? Now you got an algo with you here, but you did here as well. Right? As long as you get this here, right, they're going to defend here. That's why you're getting the reaction there, because they're defending the longs there. Right? So we don't know where it goes, but I know I got 80% odds. One more. Why would you not take that trade? Now, what I'd be looking for is a little bit more. Let's go down. Let's try 30. I'd want to see something to give me a little bit more. That's not quite enough yet. 1, 2, 3. Now, it might have, if you look in there, right, it could have, right? It was, the potential was there. So I'd be a little bit cautious now. So you had the potential. Oh, it was all there. It was ready to go. I'm going to have my 5. So you could just sit and wait for the 3, right? So it's context. What are we anticipating? After the 5, I'm looking for the 3, right? There's your entry, but we didn't get it. So that's a good example here of why it's worth waiting for this. Now, could it be, it could be a diagonal. It could be a very ugly diagonal, right? So this could be, I hate to go here this fast, right? But it's possible you could have something like this where it's A, B, C into the 1. Oh shit, we're running out of, we don't have much of a, so, it could come over here. This could be A, B, C. So I'd be cautious, right? It's not good enough. I'm down to a 15-minute. Okay, yeah, of course, right? I spot this, right? I see all of this action. That's to the tick at the 65. I see it, but that's not the start I wanted to see. So this could be A, B. We just don't know. I want this to finish what it's doing. I'm not worried about giving this to the market, right? Or giving up this on the trade, because the upside here is so substantial. If I don't get the absolute pivot turn, I mean, money, it's tempting to always want to get the exact turn, but where is the money made? The money is made in the middle. That's where the money is made. Right. Rarely are you going to buy the pivot low and sell the pivot high. If you do, right, you know, you have an extra beer that night, right? I mean, yeah, that feels good when you get it, but you don't want to aim for that, right? Perfection in trading is unattainable. Don't aspire to perfection. You're never going to get it. What you want to get is the bulk of the move. Right. And that's why simple systems often, even if it's a moving average or a Donchian channel or something simple, the bulk of the money is made right there. It's not somebody bought it there, right? Likely software bought it, right? And it will get right to that target. But we don't need to focus on that. Get the meat of the move. Let the rest of it go, right? Because whoever gets this, right, eventually there'll be a retrace, because the temptation to take profit will just be too much, right? The average person cannot do it. Jesus, I can't get that hot. Average person can't do it, right? They can't wait. So just as soon as the A comes in, oh shit, I'm out, right? And usually, right, and then the thing keeps going, and they're like, man, I should have stayed with that thing. Right. What other things? I mean, you've heard this from 1,000 people, right, in the trading community. Woulda, shoulda, coulda. Right. You got to get that out of your vocabulary. Right. Oh, I should have bought it down here. Oh, look, man, I could have taken that all the way up to the top. That's so much of trading is the battle between your ears, which I try to remind people. And as soon as you start doing that, you're just setting yourself up for the negative spiral. Right. You've got to be. Oh, you know, whether you're talking about Mark Douglas trading in the zone or some of the good psychological, you know, trainers that are out there teaching you how to flow with the market. When you're on in the market, you know it, right? You barely take almost no drawdown. It's almost like you can see what's coming. But that's the exception, not the norm. Geez, that's a bit big. You want to, if it doesn't look right, get the hell out. Oh, I didn't get what I wanted. I wanted that other little kick right there. That's what you were looking for right there. That give me that 5. I don't get it. No, I don't need to stick around here because my ego is not involved here. Now that takes a long time to get your ego out of it, right? The market has to punch you in the face a lot of times before you realize there's no benefit in getting my ego involved. Yes, of course, right? You do the TA, you get the corner, you think, okay, that's got good reasonable probability of being a winning trade. But if you get stopped out, it's next trade, as long as you don't allow the big knockout punch. Because then you're completely fucked, right? That you can't recover from it. So you're better to stop trading, go do whatever you need to do to reload your account, than try and fight back from the big loser. And people won't listen to that. They won't. I didn't. I had to learn it the hard way. I'd go, God damn it. Okay, I'm down 80%. Okay, I can get out of this. I can dig myself out of the hole. Almost impossible to do. You're better to stop trading, wait until you can reload your account, start again. Because what happens then, I talked about this yesterday, right? So after you take that big loser, the minute you get up just the tiniest little bit, you're grabbing it. Because, oh, I need it to recover. I get up a little more. Oh God, I need that. Whew. Right, okay. Now I'm only down 74%. Next one it goes a little bit. Oh, I need that one. We've all done that, right? Oh my God, I needed that one to get well, right? But it just keeps going, and see that's why you can't trade with fear. You have to respect the market, but you can't be fearful. It's like I used to do a lot of skiing, and people would ask me to teach them because I just did it for a lot of years. And you just learned how to do it, right? It's just like anything you do a lot of, right? And people say, I can't ski powder. I don't know how to ski powder. Well, skiing powder, the secret to skiing powder is you can't be fearful of it, right? You have to let the skis turn and run. So you have to ski it faster. And if you're not used to it, you're uncomfortable. So you hedge, right? You don't let the skis flow. And it's kind of the same thing here. You can't be afraid of the market. You have to know how quickly it can knock you out, but you can't trade with fear. It's got to be, I see the setup. I understand the setup. I understand the setup and the potential of where that could go. I have a target. I have a stop. Boom, pull the trigger. If you get stopped out, get your ego out of it. Okay, next trade. Stops are just cost of doing business. You're going to get stopped out more than you're not. Right? You have to be at peace with that. You can't fight that. I'd wait a little bit here. Mr. Jack, it's okay, maybe, but I'm not worried about not catching the absolute turn. So I wait here off that. That's not a good enough start for me. Okay, let me keep moving. Eighth and T, back from vacation, right? One of our very successful members started. Oh my God, the stuff he would post. Now, I almost have to do no work on the stuff he posts. Almost none. And you know, the thing is, this is what's good, because he came to us without a lot of knowledge of trading. And because of that, there weren't a lot of bad habits to break. It just took a while for him to put all the pieces together. So now what he does, the reason he's become so successful is because he follows what we teach with incredible discipline. He's not trying to reinvent anything. He just go, okay, this is what you taught me. I see that working. And that's exactly what he does, which is why he's so successful now. So look at this count here. So, okay, there's a one. Let me get that off here. I know that's annoying. Oh shit, I got to do it this way. That because I tend to
Waco police are investigating a.
If it's on the crosshairs, that can be annoying. Okay, so again, everything that we teach right here in this chart. I got price, I got pattern, I got geometry, I got an Elliott count. It just makes it so easy, right? So up, okay, it's good candidate for a one. All right, I don't, you know, it's not beautiful too, but process of elimination, I don't really have much else to work with. Although you could probably think A, B, C, but there's a couple of different ways you could count this. But here, yeah, that'll work. So this is far enough. So we go 3, 3, 1, 2, 3, 4, 5, and with a diag. Okay, so 1, 2, we're at the 786, perfectly acceptable for a wave 2. And another, just a good example, right? So when you see the deep wave 2, you know they were trying to get that pivot. They were trying to get that pivot because there's going to be stops underneath that pivot, and that's the fuel that sends it down. They can't get there. That's why the ricochet off of the 786 is often so good, because it's now all those shorts that were pushing that, now they got to cover. Right now they get a trend change right now. So we've gone from this series of, we're kind of in a box, right? So look at what happens, right? You're stuck in this box. We're going nowhere. Can't break down, can't break up, right? And then it starts to go. Now the shorts have to cover. Now we're up. Now, all of a sudden, I'm out of the box and I got higher highs and higher lows, right? So the trend starts. So where do we go after that? Well, I do get a good corner here. So here's the first corner off of the 786. Now, it's not a golden, but we get a corner pocket, right? So as I say, you'll hear me say this all the time. It doesn't have to be golden, right? It's just when I get a pivot, the pivot, as long as the pivot holds, long as it holds, right? You don't, I think it's threatened here, long as the pivot holds, right? It's just didn't get there. Ooh, didn't get there. Boom, there's your 80%, right? So that's already realized. So the 80% is burned, right? It's not like it stays. Oh, we hit, we're going to come back here. I got 80% again. No, it's the first time, right? That's where your 80% is. So that's already spent. Now we come up here. Oh, look at that. Isn't that interesting? Right to the upper parallel here. What do we got there? We're just shy of the 261. It takes me a second because these guys changed the colors on me. So we go 261. So if we go the length of the 1, projected from the 2, we get 2618 here. So here's the corner. That's his 0 line pull. So here's okay, right. So look what happens. So we go 1, 2, candidate for the 3, right? A, B, C, right? So we go up in 5, down in 3, right? It's just 5s and 3s all day long, 5s and 3s. That's all you're looking for. So if I get that 3 after this big move, it's context. What am I anticipating? Well, I got the 3. Right. So here, so I've got, look at the combo here. I've got both a 50 here, and then I've got a golden zone as well as the 100. So I'm assuming that Ethan is the 100 APP. Yes. Okay. So we've got A to B equals C to D. All right. We've got the 50 and we've got a golden zone. So it's a 50 from this pivot. It's a golden zone from this pivot. Right. So we get confluence. So so we've got pattern, price. Now look at the confluence here. So we get the lower parallel here. Do you see that parallel here on this piece here? And then we get the corner here at the golden zone in the 50. So now we get a renewed 80%, right? Where are we going? Now, just because that's there doesn't mean we couldn't fall over. right? Don't misunderstand what I'm saying. But if you're taking that trade, you don't want to get out here again, back to like, oh God, I got a little profit here. You want to let that thing go because you know you have 80% odds. So if you get out here and then it does that. Now you are kicking yourself, right? Now this just takes time. So as I tell people, when you're in a winner, the hardest thing to do is keep your hands off your mouse. Just let it go. Have your stop in, of course. Right. And maybe you bring your stop up a little bit, right? As you get a little bit, you want to give it room to breathe because you don't, I mean, it's what one possibility here in the market will do this often. It'll come back to test it. Are we okay? Is it safe? Is it safe? Any more new sellers going to show up in here? That's why that little retrace is so good, because if they can't get that, right? Because there'll be bears that will be trying to get that for the same reason they were trying to get that, for the same reason they were trying to get that. They want those stops. If they can't get them, up we go, right? Because these guys, now they got to cover. People that sold here are going to start to cover. Shit, didn't do it. I was looking for it to break. I thought it would go get that stop. I thought it would do it. Can't do it. The market is talking to you. You always have to think, right? If I was short here, what am I trying to accomplish? Right? Can I get to the, well, so you'd be, of course, if you were short, well, let's do it this way. You'd be looking for where's the structure, right? So you'd be looking for all of that. Maybe I can get that break. Maybe this thing can get a little bit lower. If we can break that, then I can go down and get that. If we break that, I can go and get that. When they can't do it. All right, let me, that's good work, Ethan, right? I never have to do much on his charts. Never, right? They're all so well, because again, he's just taken everything we've taught and he applies it. So there's very little I ever have to do on his charts. Almost never, right? Since purple, right? So he's now a purple belt, right? So he's put the time in, he put the work in to get this good. Okay, let me keep going. Narwhal 72, my current, one of my favorite handles, Narwhal 72. All right, what are we doing, Narwhal? We're looking at AMD. All right, so we got AMD should be interesting. I haven't looked here. I looked at Intel the other day. Okay, so, all right, what are you thinking here? Oh, all right. It takes a minute to come in. Okay, so I know that feels like a bit of a cluster F, and it's hard to see when it's not yours here. I gotta copy that. All right, I like to see the more shit on there, the better I like it, right? Because I know they know what they put on there. And it means that they're applying and they're testing and they're looking. All right, I'm gonna just change this because I'm just so used to it. Let me go to my template here. We'll get back to that. All right, I go there last, right? As many of you know. Okay, so what are we doing here? So he apparently likes to put the price on these pivots. Okay, I got no problem with that. I guess I can't. I would take that off during the analysis here, but shit, can I do that? Pivots, can I do that? Yeah, there we go. So just for me, because it's just one more thing that might confuse me, I would take them on and off, right? So while I'm doing the TA, I'd take them off, and then when I'm ready to trade, I'd put them back on. So coming off of the low here, this looks, we've got just a big base down here. All right, so we've got a good, all that shows you is, okay, I've got a good launching point here, right? So this, well, you could really do it this way and say, okay, this was it's almost Wyckoffean, right? So you could look at this and say, okay, so there's the spring. All right, here's the up thrust. Here's our spring, off we go. All right, so we had the basing, right? And now we launch. Okay, boom. What do we do here? Looks like, when do we get there? No, we're not in log. So let's go from here to here. Right, we get right to the 50. All right, so here, this is, okay, do you see what, this is the shit we're looking for, right? So this is what I'm trying to teach you. All right, so when the market's coming down, you've got to be thinking, oh, great, the market's coming down, not, oh shit, man, I can't sell it. I can't buy it when it's going down. It's sort of like Bitcoin right now. It's like, I'm long as hell in Bitcoin, right? In terms of just my holdings. I would, it's not that I'm rooting for it to go down because my asset values go down with it. But if I get the opportunity to buy it lower, I'm interested in that. Same thing here. So it's coming straight down. So this is where people get nervous. Like, oh man, it's come down. I can't buy it when it's going down. I can only buy, I'm going to wait till it breaks that pivot. Well, okay, in this case, you got away with it, but who's making more money? right? What you want to be is this guy right here, right there, right? If they can't get them, because they're going to try and get them, right? So I also know I'm going to have an algo participating here, dominant, right? Swing low, swing high. They start buying at the 50. They keep buying to the golden zone. Here, they didn't have, one was enough. Here's the first target, blew right through that third target, right? So this was, oh shit, that's got to be COVID low, right? So is that, oh no, this is the hourly, pardon me. This is our May 17th low. Oh my God, I thought I was looking at a daily. Okay, so let's pull out here. So 1, 2, okay. I can't make this shit up, guys. Okay, let's just hide that. Okay, what's the most probable location for a wave 3? Right, members, of course, we this is what we teach you, right? Most probable location for a wave 3 is between the 1618 and the 175. Where do we go? It's like, come on, man, it can't happen that many times. It can't be that consistent, can it? Can it? I mean, I can show it 1,000 times. There'll still be someone who will take their profit right here, right? So they won't. You got to let it go. If you're anticipating the third, don't take profit here. Have some conviction in your technical methodology, right? Oh, that's a 2 at the 50. Well, maybe you take a partial here, but I'm going to leave some to run in case I get that third. Where does it go? It's fucked. Okay, so if you didn't catch that, all right, no problem. Well, okay, I know what's going on here. I got a 1, 2, I got a 3. Now I'm correcting the 3. All right, so I'm gonna just to kind of declutter the chart. I'm gonna take that off. Oh, we're still in that channel here. I guess I can pull that off. All right, so we know we have a good candidate for the 3. Doesn't mean that we can't, go back to this low, but I here in terms of probability and context, which is what Elliott gives you. Hey, 1, 2, 3 is right to where it's supposed to go. Now I'm looking for that correction. Am I done with that correction? Well, it doesn't quite look like it, does it? Well, here's the, okay, right? A little discipline, right? Can I put it in context? Well, I'm looking for 3. So you might have thought, excuse me, you might have thought, oh, we're in here. Oh, ABC, off we go. Okay, 3 here, 3 here, could have been, right? So it's been a little bit shy on time, or this is kind of sharp. This is even sharper. You might have anticipated that it was time to go here. Oh, okay, time to go. So you got that. Oh, so let's play that out. So you did the same thing. Okay, so you looked and you say, I'm not sure, but I'm going to take that first little retrace. And so you took that, right? And you got a little, what'd you run into? You're going to have to check that, and you're going to have to check that. Where's the resistance going to be? Well, you're going to have just structural resistance, right? Oh, shit, I keep forgetting. I can't do that. You're going to have some structural resistance right there, right? Just prior support becomes the resistance. But right, again, if you've studied this, the way this algorithm moves, it works off of these pivots. So there's going to be one algo there. If that breaks, you got to go here, right? So you start here, right? So that's the first thing we run into. Boom. Now this algorithm here has a target, right? You got to know what they're going for. It has a target right there, right? You see the green line, right? I know that's probably hard to see, but if I wiggle that and then put it back on, right? Here's the target, which would put it right here. Here's the buy zone between the 50 and the 618. Notice his entry. Now you're looking at that going, okay, how can I if I get down there here, and if I'm looking for 5 here, so if it ends up being ABC, right, and that doesn't end up being the 4, well, then you get another 3. So now you're thinking, oh, it's a combination, right? So I got 3 followed by 3, WX. Okay, it's not that complicated. It's not like, oh my God, we're into the W's now and the X's, right? It's just 3 followed by 3. Okay, now I'm looking for another 3, but I got to do it via an ABC. So I'm looking for 5 down here. Hang on one second. Sorry, package delivery. Okay, so let's zoom in there. So I'm still on the 1 hour. 1, 2, 3, 4. Oh, could that be the 5? Could be. All right, that's a pretty good rip here. So this is what it, on the assumption here, we've got this correctly identified. There's your 5 down into your A, right? So you've got a plan, a game plan here. Okay, we've got 3 down. That's not the low because I don't get an impulse off of that. I get 3. All right, just process of elimination. Okay, well, it's not going to be the low for the impulse or to start an impulse. What else could it be? Well, it's a short list, right? So W, I'm looking for the X. Well, now I got to get I got to get 5 out of this, right? If this is going to hold, I'm looking for 5. Pardon me. I'm looking for that 3 via an ABC. So I get 5 into the A. Well, now what am I looking for? I'm looking for 3. If I get that 3, it's not so much that I would necessarily short here. I mean, although you could, right? If you're a very aggressive trader, you could trade that because you've got almost the entire pattern in place. Right? It's in play. You've hit the golden zone. You got 5 down. You're looking for the ABC. You could, a very aggressive trader might take that. Take that. Right now you're getting the short followed by the long. But if you're a little bit more conservative here and you're going with the trend here, which, we're trying to participate in this larger impulse, you don't have to get every swing. So if it comes up to the B and then we start to head lower, I'm just down here licking my lips going, oh, come on in, right? So you got one more leg to go. So if we get up here, here's the B. Now we come down. I know right where we are. Now, does that guarantee a winner? Oh, of course not. Nothing says it couldn't do this. But now I've got all of the ingredients that we look for, right? That's all you get, guys. That's all you get. Holy shit, look what I got here. I'm right in the buy zone here between the 50 and the golden zone. I've got a beautiful combination. Excuse me. So I got my WXY. I've got even the subdivision. I got 5, 3. If that comes down in a 5, I got plenty of clearance here, swing lows here. I'm coming to the golden zone right where I should be. That's a trade you take. Now, the last piece of that, because he doesn't have it on here yet because we're not there yet. The last piece, right, would be that. Now, look at your target. Right? So, I mean, it's not that hard. See, you go into this saying, okay, well, the odds are, is you go into that trade saying, well, here's a couple of things I know. I know I'm going to be wrong more than I'm right. I know I'm going to get stopped out more often than I get that. But the only way to get that is to swing at the pitch. If it comes down here, and again, you don't have to buy the pivot. You don't have to get the turn. You could just, this is like, we'll often say, wait, give me the little reaction and then give me the first retrace. Same thing, right? Because if they can't get those stops, they're going to have to cover. All right. Where's the next resistance? You got to know where the defense is. Right. That's the next resistance you got to get through that, because there'll be an algorithm there defending that. Right, so you got to get through that. So if it comes up here and it does it like that, okay, well, we got a target up here. So maybe that's your 1. Right, we could certainly go up to some of these upper targets, right? You might get over to that other side. So let's lay that out. Just out of, oh shit, I take way too long on these. I know I do. All right, so let's take the 1 and let's say we get our 4. Let's use his entry right there. Right, so that's what he's projecting. Okay, so I got here's a reasonable target would be 100, the length of the 1 projected from the 4. Now I don't have the 4, right? So don't write this down. It's when you get the 4. Okay, well that's a minimum target, right? Well, I shouldn't say that. You could double top up here, right? So you could hit it here, double top, and the thing rolls over. But wouldn't that be unusual, right? You'd have a very odd looking. For AMD, that would be really unusual. What would be more typical is that if you hit your head there, right? If you run into some resistance, that it's just not done. Right, that we get, now we go on, right, now. Right, and this, you'd have to go all the way back and get the entire thing in context here in terms of what the macro, the largest degree count is, but coming off of this low, I'm assuming that's 4-ish. I mean, we're down here on a, this all looks like it's just part of a corrective, you could even do it this way, right, it's just all corrective. But looks like that's a nice accumulation Wyckoff schematic, actually. So coming out of this, right, you got plenty of upside targets here. Plenty of potential for that to keep going. Right? Let it go. Right? Don't grab the first little, oh God, I made $200. I'm good. Right? Even he's got targets here 8 to 1. 11 to 1. You don't need to hit too many of those to offset all those little stops. Small loser, small loser, small loser, big winner. Right? It's just, you can't have big loser. If you allow big loser, right, you need to put that on your forehead. I'm a big loser, because it's always self-inflicted, right? I know that's harsh to say that, right? It's not, it just means you're still learning. I really shouldn't say that, right? But it just means it didn't have to happen, right? You did it to yourself, right? These are when you have the big loser, it's a self-inflicted wound. So hopefully, usually people have to experience it once, right? To know what the market can do to you. And then, you're back to, it's not fear, but it's respect for how quickly the market can take. And once you have that, then it's finding the balance between, then it becomes really about having conviction in your TA. So I know that I've got 80% odds there. So why am I going to take profit here? I got 80% odds of getting there. Now, is it going to hit every time? Of course not. Right? Many of these are not going to get there. They're going to fail, or your trailing stop will get stopped out. But the times that it does, those are what make your year. Oh, that's good work, Narwhal 72. Okay, so let me keep. Oh, Mecha Tataku back with Tesla. We haven't looked at that in a while. Let's look at the chart here. How are we doing? Okay. Mecha, what do we got there? That one didn't work. Okay, so let me try chart image and see if I can work with that. I can work off the image. Okay, so we got Tesla. Now, Mecha does very good work. Interesting, right into this double bottom. So 1, 2, 3, 4, 5 for an A. I mean, is there any confusion about what that is, right? Is that's not 5 followed by 3 followed by 5? That's not hard to figure out. Now, double tops and double bottoms are something that you have to pay attention to. This was my nemesis for a long time, and now I'm very mindful of them. The market loves to do that, particularly retail. So what are they doing, right? What causes double tops, double bottoms? Breakout traders, right? So this is kind of the flip side of what we're talking about when we're talking about pushing to get stops. Market makers, people who can influence, at least if not in the long term, the short term direction of the market. This is a common phenomenon. So retail tends to be breakout traders. So whether it's a breakout from a high or at a double top, or a breakout from a low, they'll enter like within ticks of it breaking the low, right? So market makers, and again, well, let's just call them whales, people that can move the market at least short term, take advantage of that. So that can be a liquidity grab. Oh, all those stops are down there. They grab them. So look at the reaction coming off of that, right? So you have to be just mindful of it. So as a day trader, that was my nemesis forever, right? It was it always was an Achilles heel for me. I was getting burned on the double bottoms and double tops until I literally have software that highlights them so I don't miss one. Okay, so A, B, C into a W. So what's my candidate here? Am I done? Well, I don't have full context here. This is a 4. I'll probably not, right? So here's our high at 900. So he's excuse me, he's proposing that it's 5 into, so we got a zigzag. But right, so why would you not assume at this point, oh, hey, that's ABC, up we go. I'm looking for an impulse, because we get something kind of ugly here. We don't get a clean impulse. Now, here's the problem, right? So you could be looking here thinking, oh, diagonal, but you get an impulse here. So his deduction here is that it's ABC gives me the W, triangle into the X, right? It's just something you memorize, right? So in terms of all the possible scenarios that could create an X wave, triangle is one of them. So I can go ABC into the W, then there's A, B, C, D, E into the X. Now we're going again, looking for 5. But what he's looking for is the largest A, the big B, down for the C, right? So maybe it ultimately becomes a triple bottom, right? So yeah. Oh, yeah, okay, good. Oh shit, I gotta find it. Okay, he changed that link. Okay, so let me try that. Okay, there we go. So now I can dig in a little bit. Let's give it a minute to come up. All right, there we go. Okay, so let me get that off. Here, I gotta copy that. It's weird when you get it, it won't let you do anything to it. And I always want to take that cursor off. Okay, so let me hide all that. All right, so right off the bat, like the first thing I want to see is, how are these pivots doing? Well, it looks like that is a slight break, right? Looks like, did we get a slight break there? We did, right? So that's a, all right, slight break. So you give advantage to bulls there, right? So, but note here, it doesn't make target. Interesting, right? So the break here gives the advantage to the bulls, but be sure you follow this, right? The next algo here. So it's the algo, as I try and tell you guys, it's not like they reverse long here. They wait for the next setup, right? So they got stopped out twice here. And which happens, but again, I remind you, they don't care because eventually they'll get a series and it'll compensate them far beyond what they lose when they get stopped out. So both sides get stopped out, whether it's the same company or we don't know, that doesn't really matter, right? So we can just see, oh, the footprint here did not make it, something else going on, or we're just in a range, right? But that was the first tell, right? So that's see, it's easy to look at that and go, it wasn't that much of a break. Let's just go with it. Well, you could have put on you had a nice trade come out of that. All right. So just off of pattern alone. So you go here, I got 5, I got 3. What am I looking for? What's the context suggest to me? 5, but it doesn't make target, right? And that was the tell. Okay. So coming off of here. So as we start to come off of that, now you don't know, see when you don't know when you're right here, you don't know that that's the A. You're thinking, oh shit, oh, double bottom here, ABC, I'm good to go. Well, it doesn't play that way. He doesn't get it. So we get the A, B, and I get a little impulse here. So just process of elimination. If it's 1, 2, you might have been thinking, you would have been thinking, right? So one of the possibilities here is that we're going to come down and go up for an impulse, but we overlap. Okay. So what's the next thing it could be? So you might think, oh, it's a diagonal. Okay, but you're not anticipating the impulse right here in the third, well, in what would be the third wave here. So it's not that it's not possible. It's just less probable. So that's what you're working with here. What's the context suggest? Okay, so if it's not 1, 2, 3, 4, 5, what else could it be? A, B, C, A, B, C, D, E, A, B, C. Now this is a bold call right here on the 4-hour to go up to anticipate that that's the B. Again, not unlike what's happening in Bitcoin, right? Double bottom. Now, is it an X wave going in, or is this the largest degree? I should take that up. Is it the largest degree B, right? Is that what's happening here? B into a C. That's a bold call. Right? I promise you, most people, if we break out, we break over 800, this is not what people will be thinking, right? They'll be thinking, oh, lows in, oh, off we go. But it's not a clean impulse, right? So while there's nothing that prevents this from just going on and on and on and on and on. As a trader, all you get to work with is probabilities, right? So it's less probable that we just keep going up here because of the context. Now, next hurdle is got to get through that golden zone. Right now you say, oh, it got through here, but no, this is the second time down. All right, so the next thing up, it's got to get through that golden zone. That's from the dominant pivot here. So this will be the tell. If it gets through that, well, this to take the short up here, this will be a gutsy trade, right? That's a very gutsy trade. Well, you wouldn't have that as a target. You'd just be down here looking for maybe you would be A to B equals C, pardon me, 0 or X to A equals B to C. You'd be looking for something along those lines, not anticipating the algo target here, because if we get up here, we've broken the sell side algo, right? So you'd have no algo resistance. So where would the algo participate there? Well, if we break it all the way up here, the next time it participates is right there, where you'd have multiple pulls, but this would be the dominant. So to get to this target, it's got to break this one. But that's not the only one in play, right? You'd have this one you'd have to get through. Oh, probably this one as well. Those will all, the software will use all of them, right? So, but that's the dominant, right? That's the one you got to get through to get to that, right? So that would be a gutsy call. But if you've done this TA and it gets up here and it does that, so for me, if I'm up here, I'd be buying puts. If I want to play that, because the puts will be less expensive because the thing has been ripping higher. So calls will be expensive all the way to the out of money calls, up or near the money puts, but you want to give that time. You want 60 to 90 days and you got to pay for that. Always a trade-off with options, always a trade-off. So that's good work here. This will be interesting to track this, how that does up here, if this ends up being corrective. Well, you won't know. Ultimately, you won't know because this is possibly, right? That could be a diag until you get here. Do you get a 4-5, right? Then you'd know, okay, this analysis was incorrect. The 4 was in, and this turned into kind of an ugly starting. Maybe it's a 5-3, 5-3-5 diag. If you can dig 5 out of that, you say this is a, you're working with what you got here. All right, but the work is good, and I like the courage to say, okay, this is going up. I see the potential here to take that trade. Right? I promise you, nobody else, or the majority of the market, I should say it that way, will be bullish as hell. Right? All right. So, Rixus. All right, one of our senior members, always posting good content. So look what I got from Rixus here. Oh, Amazon. He's all over Amazon. Okay, what do we got here? Amazon and gold. Okay. All right, let's give that a second to come up. Well, that's a monster B wave, isn't it? On the daily. Well, let's take a look at that in context. All right, I'm gonna put that stuff down so we can get a good look at it here. All right, Rixus, you're making me work for this one. How are we doing that? I guess we'd have to do it this way. A, B, so he would do it. So we'd have to get there. Oh, that's not the one I want. I want this one. We'd have to go A, B, C. Let's put that down. And let's change the color so we don't get confused. All right, so A for the B. All right, that's a I think you'd have to do it that way because you'd need this 3 to give you your B. 1, 2, 3, 4, 5. I think you might have to do WXY in there because that looks like this is. Let's just take a look here. See, Erixus. I'm pretty sure he does this deliberately to make me work. Okay, so 1, 2, 3, 4, 5. So that would be an A. All right, so you'd have to do A, B, and that's a C. So this would have to be your. Do it that way. W. X, Y. So I think maybe we do it this way. I think we have to do it that way. So we'd end up doing it W. Oh, fuck, come here. This would have to be W, X, Y. So this is, maybe we truncate it here. That doesn't look like it's enough. You'd have to do A, B, C to get that W. That's a tough one, right? So A, B, C, D, E. Maybe you'd work a triangle in there. Well, here, at the end of the day, I don't know how much it really matters. What do we got here? We've got accumulation. Right now, is this an upthrust? Right? Is this distribution? So in a Wyckoff setting, you might look at that and say, "Oh, we're not advancing the trend. We're just going sideways here." Is that the upthrust? That seems to be what he's thinking here. Because this is unclear. You're making an educated guesstimate as to what you'd have here. But there's definitely a Wyckoff scenario here where, so you might be looking at this as upthrust, right? So after accumulation. So are we coming back down here? Well, it certainly looks like he's thinking that we might be. So if I put his stuff back in here, A, B, C coming down for the 5 here. So now your question is it 1, 2 or A, B into the C? I wouldn't bet against. Well, I'd be hard pressed to be shorting Amazon. It's like shorting Bitcoin. I never do it. You can see how that could play here. Now we are on the daily here. So this was your 4, 1, 2. This looks very 4-ish. That could be top heavy there. What we got here? Usually give me something good down here. It looks like that's potentially into your 4 to your 5. MACD hasn't crossed yet, and that is your OBV. Okay, so sellers have the ball. Well, I might do it this. I might just pull this out here and say, if we break out of this, well, here what you'd want to see, right? If you're thinking on the short side, is you'd want to see that break and then get tested right? Test it. Come down. Maybe the C's down here. Oh, that might be too far. Do it this way. Obviously, that was support or resistance, teed up for support. I don't know that I would short it, but that's about, so if that would be getting, so if it's A, B, and this would be the, oh, come here. All right, so if we're looking for C, 1, 2, 3, 4, 5. Now you'd have a spectacular, well, you could do the same thing, right? Spectacular buy. Oh, I might do it that way. So here was the, now, right, and look at the similarity here. Up thrust, down, up we go. Right. So this looks like you might have something similar here. This obviously was accumulation before the push higher. If that's distribution, you can anticipate this to come back down. That would be ballsy here. I'm assuming you're already short, Erixis. I know you trade this aggressively on both sides of the market, but if you're playing that down, I don't think you'd be done here. Triple bottom, I think you'd be looking for one more down. So the next really interesting place to be a buyer would be down here at, call it $2,000. All right. Rix just makes me work for those. All right, there we go. Okay, guys. All right, let me keep moving. Almost done here, and then we'll throw it out to any subs that are watching. Okay, this is CZA. What do we got here? Let me copy this so I can look at it. Two months today. Okay, check yearly, 2 months today. Okay, so what do we got here? So this is the 12 month. Interesting. Okay. I'm always fascinated by what these guys give me. Oh, look at that. January 1, January 1, January 4th. All right, the 12 month. Wow, this is interesting. Okay, so we're going back to 77 on the SPX. Okay, 1, 2, 3, 4. Is that it? Well, it doesn't matter here. It looks like we overlap. Yeah, just a little bit. So we get a leading diag, right? So we get the leading diag 1, 2, 1, 2. It can be hard to see. I'm going to change that color so we make it a little easier spot. And I'm going to push this off. Okay, so what are we saying here? Check the time relationship between the wave 1, the proposed 3 on the yearly. See also 2 months for the whole move. 2 weeks for 29 low, 2 days for COVID low. Green notes on the 2-day chart, fundamentals shifting. Wow, so he's giving us a full account. Man, this is good work here. 1, 2, 3 comes in here, 4 working towards that 5. I got to zoom in there to see that. Oh, shit. Okay, so 1, 2, 3, 4. These are tough to pull that out just a hair. Let me go down to, oh shit, that's doing a yearly. Let me go to a weekly. Let's do it. Let's do a month there. A, B, C for the low. 1, 2, 3, 4. So he's looking for this to year-end high. I gotta go to a weekly. It's hard to see it in there. I rarely look beyond the weekly, so this is good work here. 3, 4, 1, 2, 3, 4. So heading towards, well, if we get there, so how are we going to get there on January? Okay, this is a tricky one. This is the 4. Looking for this. I guess this is super cycle here. 3, 4. Looking for that 5. This would be first target from wave 4. That's going to be 100% the length of wave 1, I'm assuming. Oh, so it looks like the implication here would, shit, I got to pull this back, would be that there's one more push up. 3, 4, that's the big one. So this is the big one. He's looking for 1, 2, 3, 4. We're looking for that ultimate high up there. Well, that's That's a bold call right there. That put us at 61.46 in the SPX. Bold call. 1, 2, 3, 4, 5. At least like all the ingredients are there. Wow, that's just great use of geometry. A little throw over here. That's a biggie. I don't think I've ever looked at a 12-month on the SPX before. That's a tough one. Okay, so coming up from the 4, there's your COVID low. 1, 2, 3, 4, pushing for that 5. Well, you know, as I've said many times, it's the correction that's coming is going to be massive. But as long as the Fed keeps pumping, doing what they're doing, it's such an artificially inflated market that when it does break, and it'll typically be the thing you don't see coming, right? That's almost always what happens. That when we do break, it's going to be substantial, right? And people are going to get caught off guard because I think there's a sense of complacency to some degree as we hit new high after new high after new high. You know, it wouldn't be a bad idea here, considering we're here up at this target zone for him. Now, that's not, it seems to be the implication is that there's a retrace coming, and that there'd be one more kick up to meet that timeline. It's never about, if you're very long the S&P or stock indexes, never a bad idea when you're hitting a technically confluent moment like that to maybe buy a little insurance. You could do it with options. You could do it with some bear ETFs that will profit if the market's going down. It's not a bad thought to hedge a little bit. I don't know that I would be entering here anticipating that this is enough here to turn the market. It could be, right? You never know, right? But is there enough going on in the background right now with what the Fed is continuing to tell the market it's going to do, whether you want to think of it as the Fed put or whatever? They're just making it very clear that they're going to keep flooding the system with money until they get the result that they're after. At this point, you know, a lot of people think that they've created a monster. They got to keep feeding it. So there's no way out of the jam until the thing does this, right? It's got to correct itself. We can't stay so artificially inflated forever. Certainly they seem to think that there's going to be a graceful exit from this. My suspect of that. So I don't know that there's a trade necessarily here for setup, other than if you're long the indexes, not a bad place to put on a little hedge. Now, it's like buying insurance, right? Month after month, if it doesn't crash and your equities keep going up, well, hopefully they've gone up more than the cost of your hedge. It's not extremely expensive to put on. Oh, you could do a bear ETF, or if you're buying options, you know, you don't have to buy a year-long option. But if I was going to protect myself, I would just buy one or two, right? Depending on how long you are in the market.
He said to zoom in on the hourly for the finish.
On the hourly? Oh shit. Okay. Okay. This is a challenging count, right? I've struggled with this one. 1, 2, 1, 2, 1, 2, 3, 4, 5 gives me the 3. There's the bigger 3. 4. See, I'm a little torn by the suggestion here that the top could be in. So if it's 1, 2, 3, 4, 5, it seems to be he's suggesting the top is in. But then when I look at his time frame, he's looking for another leg over here so that we get that parity. This is a tough call, because you can certainly see how this is. The range of swings here is getting very, very compact. So we have very little, right? Yesterday, right, we saw the sell-off and then rebounded all, to new highs. Now, as we sit here, this would be, so if this is the 1 and that's the 2, well, look at how tight we're getting here. Now we're starting to get some volatility up here. For here, oh shit. I mean, you can't, there's nothing wrong with looking at it like this. Whatever that pivot is here, if we were to come down, this is where you can anticipate some support here just to the 38, just working dominant to dominant. If that high is in, it seems to be based on his count, he thinks it could be. Well, where's the trade? If this isn't going to free fall, the trade you want is this one, right? Because they're going to want that. And if they can't get it, right? If they can't get the new high here, well, okay. So like here's a good example, right? So after this went down, you're thinking, oh, no way, man. No way. We actually get to a new high. So when we got here, but what you'll note after doing this, what you'd be looking for is this, right? We just get a straight shot. So the context here is confusing, right? So you wouldn't have been thinking, oh, I'm selling that. Even though coming the other direction, it would have been there. The fib level would have been there. Oh, if you use that or that, right? So look, we got to the golden zone, little reaction. You see it, right there, little reaction, but not right. So you can see the software kick in, right? That they break it, right? So buyers take control. Now, at this degree, there hasn't been another retracement here off of a major pivot yet. So now we're still in logs. I can't look at it with a regression channel, but something like that here, we break out of that. Well, here's how you want what, right? Don't take the break. You want to see that, right? The retest, right? Last kiss goodbye before it goes down. That's how I would kind of be watching for this. So if I came down in 5, I'd be looking for that retest to come back up here, because that's the B, right? They're trying to go get the new high. If they can't get it and it rolls over, you can anticipate that. And then that would put you, right? You can just kind of put the whole thing together. All right. If we're going to come down all the way. All right. That's what I got. Okay. I think that's everybody. Unless we have any amongst viewers here, but let's see how we're doing on time. Oh, we got a little bit of time. All right. Anything I need to see here? Oh, CZA, the time price research. Oh, that's CZA. I have to check that link. Let me copy that link. I'm curious what you're posting there. All right, that's all I got, Derek. Monty, I think that's all we got. Oh, that's his time. Interesting. All right, is that? All right. Well, maybe it's a short day for us. Oh, that'd be good.
If anyone watching wants to have something request or chart or something like that, we've got a $15 request, and of course members get that for free with our daily, I guess, live stream. So, but yeah, if no one requests anything, then we can end it. We'll wait a little bit to see, but
CZA, oh, nice. 4480. Oh, you damn near nailed that. Just beautiful target up there. All right. Well, let's wrap it up then. It's a short day here. I thank you guys for hanging out and going through this, right? I hope you learn a few things and maybe get some ideas about potential setups or trades you at least get on your watch list. And if you don't take the trade, perhaps put it on your watch list and see how it develops and see if it's consistent with the way these things are being labeled and talked about and some of the TA that we're putting on it. All right. So I think with that, we'll wrap it up. Thanks again, guys. And we'll call it a day.
Yep. All right. We'll be around tomorrow with my live stream. So
don't forget that. Set your alert notification, same time, 9:30 to 11:30, and you'll see a very different approach. There's a lot of members really, really gravitating to it. So check it out if you have time. And of course, we do record these so you can check them out later. All right, guys, have a good day.